Hello friends. So in first part, you have seen that what is coffee can investment is all about and what are the changes which I made in the formula to build or to identify the great fundamental company and build my portfolio when it comes to my investment. So that we have learned in the part 1. In part 2, we are going to see a case study in the Excel sheet for the 9 different stock from my identified list of companies. So if you ask me, I started investing through this approach from last 2-3 years, mostly post pandemic. So basically I'm a swing trader who invest in the stock market for a period of few months to few years as per the potential available in particular stock. And this investment approach I have recently adopted from last 2 years. So if you ask me, as far as my total portfolio is concerned, it is 40% the investment and the 60% is the swing trading, which I am doing in different stocks. So as far as coffee can investment is concerned, I have 17 to 18 stocks in my portfolio, and as far as swing trading is concerned, currently as on date I am having more than 46 stocks in my portfolio. So now let's start our discussion and see how this portfolio had performed, which is a combination of 9 different stocks from my identified list of companies. So in this video we are going to see when to buy these stocks, what are the opportunity when we are going to invest in this stock after building the identified portfolio list for the coffee can investment. So let me take you through trade view. So I have identified 9 list of companies to build this case study. So what we are going to do is I will teach you when to buy these stocks. So that is very important, because buying the identified stock at its fair valuation is very important. Otherwise we are going to end up buying at its all-time high and reducing our CAGR over the period of time. So the process of buying these stocks are, there is a correction in the market, then only we are going to buy these identified list of stocks in our portfolio. So what is the process? I have posted a video also how to create your wealth or build your wealth by doing implementing a simple strategy of 200-day moving average. So that only we are going to adopt here. So please watch that video to understand how to implement the 200-day moving average strategy and build your portfolio through your identified list of companies. The first example or the stock which I have picked is TCS. So I have already put the indicator that is 200-day moving average that you can see here, and which is shown by a white curve. So I have taken the last 5 years of period for our case study. So wherever you are seeing this green symbol, that is our buying opportunity. Let me show you. Let me take you 5 years back. So from 2015 till date, whenever the opportunity is available, I have made the case study out of that. So the first step is, whenever the price level of particular stock is trading below the 200-day moving average, then only we are going to buy or make position in that stock. So here you can see on 15 December 2014, the stock prices has came down below 200-day moving average and we have made our position. Now, you can use this 200-day moving average with the combination of RSI also. So if you can see, this is the RSI chart below in the purple color. Whenever the stock prices is below the 200-day moving average and at the same time the RSI is below 30, then it is a best combination to buy that stock, because it is available at a very fair valuation. You can see I have made multiple position in the TCS as far as the 200-day moving average plus RSI is concerned. So all these position and the value where we have purchased this stock, I have put it in the Excel sheet that we are going to see after seeing this chart pattern. So see, over the period of 5 years, we have made multiple investment whenever the opportunity are there. This is the first stock. The second stock is Hindustan Unilever. So let me show you the chart of Hindustan Unilever. So Hindustan Unilever also you can see we have made a multiple position whenever the stock prices are below 200-day moving average, and at the same time whenever the RSI is below 30, then only we have made our position. By doing that, we are making sure that we are not buying the stock prices at very high price level, and we are buying the stock prices at its fair valuation. Then only we are going to end up with a higher CAGR. So that is why whenever there is an opportunity, you have to consistently purchase those in stock which are there in your portfolio. So you can see here we have made multiple buying in the Hindustan Unilever. Now the third stocks in our portfolio is Infosys. So again, Infosys, if I can take you and if I will show you, we have made the same position whenever the stock prices are below 200-day and the RSI is below 30. So we have made multiple position, that is 1, 2, 3. And if you can go back, you can see 4, 5 position we have made in the Infosys. So that is how you are going to invest whenever there is an opportunity. Now let me take you through the Excel sheet to show you how we have made the multiple position in 9 different stocks and build our coffee can portfolio of from last 5 years, and what is the CAGR we have gained over the period of this 5 years. As per the modification which we have made and identified and build our portfolio, that is the first formula which we have put is sales growth more than 10% over past 10 years, that is year on year sales growth of more than 10%. The second was average return on capital employed more than 30%. So that was the second criteria. And the third criteria was market capitalization more than 5,000. So again, from there we have got the list of approx 38 companies. And out of that 38 companies, we have taken 15-20 companies and added the financial sector in that and build our total portfolio. So again, I will share the list of companies in the description box. Now coming back to Excel sheet. So this is the case study which I have built for last 5 years. The first company was TCS. We have seen in the trade view. The second is Hindustan Unilever. The third is Infosys, ASIANPAINT, PIDILITIND, HDFC, HDFCBANK, DABUR, Titan. So these are the 9 stocks where I have been investing consistently from last 2-3 years. But for the sake of case study, I have taken a longer period to show you how CAGR is working over the period of time. So if you can see, we have made the multiple buying whenever there is an opportunity. So opportunity is nothing but whenever the stock prices is trading below 200-day moving average and the RSI is below 30, then only we are going to make the position in that particular stock. And we talked about the investment method also. If you are having a lump sum amount, you can divide it into multiple stocks and invest it as far as the opportunity is concerned. And the second is on month basis, you can do it on the SIP fashion also. So you can see we have made different buying in these 9 stocks. So if you can see the below table under each stocks, the total investment in TCS you have made 1,11,930, and as on date the value of TCS in your portfolio is 3,01,520, and the profit you have made is 1,89,590 with a CAGR of 25% from last 5 years. In Hindustan Unilever, the investment you have made is 1,24,830, and the as on date, that is 25 Jan 2020, when I made this case study, the valuation is 1,62,890, and the profit you have made is 38,060 with a CAGR of 17%. Now coming back to Infosys, you have made the investment of 51,690, and currently the net valuation is 1,72,200, and the profit you made is 1,20,510 with a CAGR of 27%. Now in ASIANPAINT, you have made the investment of 86,210, and currently the valuation is 1,88,820. You have made the profit of 1,02,610 with a CAGR of 30% over the last 5 years. In PIDILITE, you have made the investment of 41,930 and currently the net valuation is 1,29,450 and you made the profit of 87,520 with a CAGR of 34%. That is a great CAGR. In HDFC, we have made the investment of 82,510 and currently the valuation is 1,77,100 and the profit is 94,590 with a CAGR of 17%. So in some cases, we are getting the CAGR of 25%, 30% and even 34%. And in some stocks, we are getting the CAGR of 15% or 17%. So if you can take the average, you will be getting more than 18-20% CAGR easily if you are going to select the great fundamental companies. So that is very, very critical whenever you are building your coffee can investment portfolio. Now coming back to HDFC Bank, the investment we have made is 41,250 and current valuation is 1,19,040. Profit we have made is 77,790 with a CAGR of 19%. Now the second last company, that is DABUR, investment we have made 41,000. Currently the valuation is 86,720. Profit we made is 45,720 with a CAGR of 13%. So out of the 9 stocks which we have identified or where I am currently investing, DABUR is showing the lowest CAGR, that is 13%. But even 13% over the period of 5-10 years is a good CAGR when it comes to investment. Now coming back to last stock, that is Titan. So investment we have made is 44,790. Current valuation is 2,85,120. Profit we made is 2,40,330. That is a very, very good profit and the CAGR of highest CAGR came in Titan, that is 41%. So you see these 9 stocks are from my portfolio where I am investing from last 2-3 years. But again, as I mentioned, for the case study, I have taken the time period of last 5 years. So even if you can take this example for the last 10-15 years, you will be getting the consistent CAGR of more than 18-20% easily. So that is what this coffee can investment is all about, which is a long-term investment where you have to be very disciplined and consistent whenever it comes to investing in the identified portfolio. Video, we have seen that we have to invest in the stock whenever the opportunity is available. We are not going to invest if there is no opportunity. So opportunity means whenever the stock prices are below 200-day moving average and at the same time RSI is below 30. So then only we are going to purchase so that we will get the highest CAGR as far as the investment is concerned. Now the last critical part is, as this is a buy and forget kind of investment approach, we are not going to see this investment in between. We have to change our psychology whenever it comes to investment. So even the stock prices are going up or even it is corrected by a few percentage, we are not going to bother about that because we have not invested in the stocks, we have invested in the business. You can see the names of these companies: Hindustan Unilever, TCS, Infosys, ASIANPAINT, PIDILITE, HDFC. These all are the brands. These all are the good companies. These are picked from the parameters which we have mentioned, that is sales growth of more than 10% from last 10 years. ROC is more than 30%. So 30% ROC is very, very good ROC. And the last is market capitalization of more than 5,000 crore. So only as far as the ROC is concerned, that is not applicable on the financial sector, that is banking, insurance and the AMC sector. So that is why I have chosen the market leader from those sectors and I have added in our list of company for our coffee can investment, which I have shared in the description box of this Excel sheet. Also, you can start investing and building your coffee can investment. The only thing is, again, you have to keep in mind is, do not sell your stock in between. please attach this investment with your financial goals, and please keep the time period of minimum 5 to 10 years. Then only this coffee can investment will be fruitful. Otherwise, you will stuck in the volatility in between, and you are going to end up selling those stock at lower price valuation, and you are not getting the consistent CAGR as far as investment is concerned. So again, I hope you have liked this video. So I will see you in next video. Thank you.